If you are seeing this video, then I am already sure you are a Forex enthusiast. You might have come across Forex trading before. You've seen people make money with Forex trading. You've seen people making career of Forex trading. And you probably are wondering what really is this thing, Forex. Now, when we talk about Forex, we are basically referring to the foreign exchange markets where you trade currencies. You exchange one currency for another. So the Forex market itself is a large and active marketplace where transactions happen at any time. And the transactions that happen are between currencies, one currency being exchanged for another. So Forex exchange space involves the central bank, big corporation, individual traders like you and I who have interest in becoming part of this Forex market. Now, when we talk about Forex trading, we are talking about the business of speculating on currency prices. That means you aim to make money from increase or decrease in currency valuation. How is Forex traded? Forex is traded in pairs. Forex is traded in pairs. You swap one currency for another. Now think of a scenario, for example, that you are a Nigerian and the current exchange valuation for $1 is, let's assume it is 1,500. 1,500 for $1 for illustrative purpose. So if 1,500 equals $1 and you believe that currently dollar is undervalued and the value is going to increase against the value of naira, you might decide to want to swap your naira for dollars and hold it until the value of dollars increases against the value of naira, and then you swap back. Let's use an illustration. So let's say you have when dollar is 1,500 per dollar, you have 1.5 million, and that you'll be able to purchase up to, so you have 1.5 million, 1.5 million naira, and with this you'll be able to purchase $1,000. So with your 1.5 million naira, when the exchange rate is 1,500 per dollar, you'll be able to purchase $1,000 worth. And you believe that naira is going to lose value in comparison to dollar. So you're speculating on the price of naira now. You believe it will lose value against the price of dollar, and then you bought $1,000 worth of you bought 1.5 million naira worth of dollars, and then you held these dollars. So let's say within the next few days, the valuation of dollars rises from 1,500 and got to 1,600. That simply means your $1,000, which was valued for 1.5 million naira, is now going to be equivalent of 1.6 million. So you have made the difference of 100,000 because you invested 1.5 million and now you have 1.6 million. Now, if you ever do an activity like this, it simply means you have participated in Forex trading already, because all you did was exchange a currency for another currency. So basically, this is basic Forex trading. But when we are trying to make career out of Forex trading, we will not necessarily need the physical access to cash, and there are smarter ways we can do it. So how is Forex traded? One of the things we've established here is pairing currencies. So there has to be two currencies involved, because the business of Forex is actually buying and selling of currencies. So one currency will have to go for another currency. So the business of Forex involves currencies in pairs. So for example, let me open a Forex trading app and illustrate from there. You see that in this Forex trading app, you see different currencies here on screen. You see like this currency here, this is Euro USD. Euro USD here. Look at here, you see the description of the currency. It is the euro versus the US dollar. If you click here, you see another one, GBP USD. What is there? The pound sterling versus the US dollar. Click here, USD CHF. What is here? Is the US dollar versus the Swiss franc. So you can see all the currencies are paired, one against another, one against another, one against another. So you just do your speculation, your anticipation on which currency is going to increase or reduce in value, and then you carry out your transactions accordingly. Since we now know Forex is traded in pairs, that means you trade one, you buy one, you sell one. Now, this might start getting a bit confusing. I will tell you guys how to access the Forex market. But first, let us talk about the similarities with Forex trading as a business and every other business. So in every business, like every other business, be it you rendering services or selling goods, it is based on buying and selling of either services or goods. So you buy, sell services or goods, and then you measure your profits or loss based on price changes. So in Forex, you buy, sell services or goods. So whatever you're buying or selling is the assets of the business now. If you own a grocery shop, the groceries in the shop are the assets of the particular business you are dealing with. Now, the asset in Forex is currencies. So the asset in Forex is currencies, and what do you do with the currencies? You buy them or you sell them. The same thing for every other business. If you're dealing with groceries, you either buy groceries or you sell. You buy and you sell. As long as you're not the manufacturer, you buy, you sell. So that's activity, buying at a lower price, selling it in your grocery shop at a higher price. That is the whole business of your grocery store, and that is the same thing with Forex. You buy currencies, you sell currencies. Currencies are the underlying asset in your grocery shop. The groceries are the underlying asset, and yes, you still measure your profit based on price changes. So for example, if you bought some goods and they are being undervalued in terms of measurement, you bought something for the value of, let's say, you bought an asset for the value of $10, and the current value of that asset depreciates to $9, it means you'll be incurring loss in this business. So it is the same thing in Forex. If you buy a currency and expect the currency to gain value, but then the currency loses value, that is where you incur loss. Now in Forex, you make money from both direction. You can make money from speculation of currency to increase in value. You can also make money for speculation of currency to reduce in value. So as long as you are right in terms of the direction of your expectation, the direction of your trade, that means you will make money. So how we do it, since the currencies are measured in pairs, since the currencies are arranged in pairs. So for example, if you have this pair Euro USD, and you want to make money from selling this currency, you believe that this currency pair is going to devalue, what you have to do here is you sell this currency. In terms of Forex, you sell this currency. So when you sell this currency pair, simply means you are selling euro at this point and buying dollars. So you are selling euros and buying dollars. What you are simply telling the market is euro is going to lose value, so swap euros and hold it in dollars. Now, if you believe that this currency is going to gain strength, then you will be buying this currency pair of the Euro USD. That means you're telling the market that Euro is going to gain strength. So buy Euro, sell dollars. So sell dollars, buy Euro. If you believe the currency pair, according to your analysis, if you believe the currency pair, according to your analysis, is going to gain value, you buy it. If you believe the currency pair is going to lose value, according to your analysis, you sell it. So we've seen that the Forex market is just like every other business. It has underlying assets, and the profits and losses are measured in price changes, just like every other business. Now, how can you assess the Forex market? You assess the Forex market through two important things. One is broker. So what is a broker? A Broker is more like a middleman that gives you easy entry and connects you to the market. So with a broker, you'll be able to open an account, deposit funds, and trade in their platform. So the broker gives you access to the forex market. So it's just like the same thing. Going back to that illustration where you had naira, you wanted to swap for dollars, you are definitely going to look for somebody that has dollars. You're going to look for somebody, be it maybe bank or any local exchange where you gain access to dollars. Now, any of these things you look forward to, be it bank or a local exchange to gain access to dollar, that is the equivalent of broker in forex trading. That is the equivalent of broker. So something that will mediate between the transaction for you. So that is clear. A broker is the middleman that gives you access to the forex market. Now, after the broker, the broker will give you implementation access and even give you borrowed funds to be able to leverage in the forex market. Now, after broker, the next thing you need to be able to trade the forex market is a software or application that will enable you to trade. So most of these brokers build on MetaTrader 4 and MetaTrader 5. For short, Forex traders will call them MT4 and MT5. Fine. So these applications allows you access to different currency pairs. With this application, which most brokers have, you'll be able to buy and sell currencies. So that was the application I opened some time ago, which is here. So this one here is MetaTrader 5. We also have the MetaTrader 4. They are very similar applications, just that the MetaTrader 5 is a more recent application in comparison to MetaTrader 4. So as you can see, there are different currencies here. Different currencies. You can buy gold, Euro USD, USD JPY. If you just click here, you will see the description of the currencies and you see long list of different currencies which you can speculate on and trade. So this is the basics of forex, what it actually is. So this is the basics of forex, what it actually is, how we can access it, and how it is just like every other business.